Ladies and gentlemen, welcome to the Honor 20 ETF Launches Wealth Expo International Forum. I'm Se-Han Zhu, the news anchor from the US TV. Taiwan is celebrating the 20th anniversary of the launch of its first ETF. The overall scale of the ETF market and the number of beneficiaries have steadily increased. ETFs has become a popular financial tool among the public. Today's forum specially invites foreign exchanges and international index companies to explore the future development trends of ETFs and indices, hoping to create cooperation opportunity through the sharing of insights from the domestic and international market experts. So now, let's welcome Mr. Li Zhongjian, President of the Taiwan Stock Exchange, to deliver his remarks. Let's welcome.
Good morning, ladies and gentlemen. I'm so excited to be here. A big warm welcome to our panelists, guests, and friends who have come from all corners of the world. There is a common expression that Rome was not built in a day. And just like Rome, neither was our ETF market. 20 years ago, we had one ETF, but we saw the potential, as did the regulatory authorities. ETFs has boomed in our market. This success is due to the joint effort of all industry players and all of the TWSE colleagues. I'm so very pleased to tell you that today we have over 230 ETFs. Their total AUM exceeds $100 billion US. There is more good news to share. There has been an explosion in the number of ETF market participants. As of today, there are over 6 million, and this number has tripled in just 2 years, with an average of 1 in 4 individuals investing. ETFs have become the most popular investment product in the nation. Our ETF market offers a wide range of diverse products. This includes the themes such as semiconductor, electric vehicles, high dividend yields, and the increasingly popular ESG themes, all of which are highly favored by investors. However, we must continue the ETF momentum. We must explore ETF opportunities and index development. We must look for innovation and insight as we will see here today. There are 2 panelists discussion. The first has guests from Nasdaq, the Hong Kong, the Korean, and the Japan exchanges. They will discuss ETF future types and some exchange perspectives. The second panel has guests from Fuji Russell, MSCI, ICE, and S&P, DJI, They shall engage in meaningful discussion about the future development of index investing. In partnership, the potential for ETFs and the index industry growth is endless. Patience and time are required to create something big and meaningful. Just like Rome, which was built one brick at a time, Taiwan's ETFs have the same strong integrity and lasting foundation. The next 20 years of ETFs are exciting as we explore what partnerships can happen today, tomorrow, and beyond. Thank you.
Thank you, President Chien. And please stay on the stage. Before the discussion, we would like to invite all our panelists to come onto the stage. Let's take a group photo first. Okay, let's stay closer. Okay. Thanks all our panelists. And now we're ready for the panel discussion. So our first topic today is unveiling the next generation of global ETFs. So please give a warm welcome to our moderator, Mr. Albert Chow, Vice President, Corporate Planning and Strategy Department, Taiwan Stock Exchange.
Morning, ladies and gentlemen. Again, on behalf of Taiwan Stock Exchange, and we warm welcome for all the panelists to join the panel. The first session is about the stock exchange. So I will give you a very brief introduction of our market. Of course, today's focus is on the other exchange. So let me see. The Taiwan ETF market is actually a very solid ecosystem, and it's from the issuing. Currently, we have 16 issuers, and we also have 67 liquidity provider, while the future merchants and help them to hedge the risk. Now, let's see how the AUM, as our President Chien just mentioned, our AUM has go to the historic high. And let's see, there is a phenomena in the open-end the market, open-end fund market. In the global market, actually, the mutual fund takes more than 90% of the AUM, and the ETF take maybe less than 10% of the AUM. However, in Taiwan, it's very special. On the left chart, and you can see on the 2020, and the ETF takes 38% of our AUM, and the mutual fund take the 62. But again, surprisingly, the number on the 2023 and our ETF goes up to the 53%, and the mutual fund is 47%. The conclusion is Taiwanese love ETF. ETF do have a great future. So let's see. We dive into the ETF market. Let's see the ETF market. Within the ETF market in the 2020, you see the fixed income takes 70%, but the 70% of the bond ETF was held by the insurance company. Then again, let's see today, 2023, on the June, and the fixed income shrink to the 52%, but the domestic equity goes up to the 36%. It means that the local investor love the equity more than the bond. That's the graph show. Also, there's a few milestones we want to see. On the AUM, you can see on the 2017, and their government have a tax exemption on the bond ETF. Therefore, it goes up like to the 2019, it goes up almost 3 times. So the bond ETF goes up very quickly. However, those bond ETF were holding by the insurance company. Let's see, the next chart is about the beneficiary owner. The beneficiary owner from the 2020 to 2023, it grows 3.86% times, not percent, sorry, times. So it's a huge jump. And let's see, the fixed income also have a substantial growth. However, let's see, there are 2 momentum. One is in the 2019, also have a jump leap. Also in the 2022, it also have a 2 jump. It's because the reason is that the investor feel that the bond ETF is a very high yield product. And but again, this number compares to the high yield, the equity market is still quite low. Okay, the next one is today we launched the ETF. ETF in English is an ETF. Okay, now in the ETF, in this website, we have information for the product and the dividend and the portfolio screen tour. We also have an expert perspective and the market announcement. Okay, this concludes my presentation. Next, I would like to invite the Japan, Kenji-san, please, Japan, yes.
Okay. First of all, I would like to thank you for inviting me here today. I'm very excited to be here with the 20th anniversary celebration. Let me show you the current status of Japanese ETF market briefly. Tokyo is one of the biggest ETF markets in the world. Roughly the AUM of the Tokyo market is around 500 billion US dollars, which means that TSE is among the largest ETF markets in Asia. The number of ETPs listed on the TSE market exceeds 300. The diversification of products, especially ETFs that invest in foreign assets, is expanding. In addition, market makers active on major international exchanges have been entering the TSE market one after another. So we have seen big growth in our ETF market over the past 10 years. The left graph shows year-by-year trend of Japanese ETF market to AUM. The main driver for this has been the holdings of the Bank of Japan. Currently, about 80% of them is held by BOJ as a monetary policy. So excluding BOJ, the remaining part is about 12 trillion yen, or around 90 billion US dollars, as shown by the dark green bar. The right bar chart shows the breakdown of investor type excluding BOJ. As you see, the 2/3 of that remaining part is held by domestic institutional investors. Although the BOJ has a big presence, holdings other than those held by the BOJ have also shown strong growth. As the left graph shows, the AUM, excluding the BOJ's holdings, has doubled since 2014. In particular, I would like to highlight the growth of our ETFs linked to foreign equity and foreign bonds. I put the graph of these two asset classes on the right. And you can see significant growth over the 3 years. As for foreign equity ETF, the main holders are the financial institutions and retail investors. As for bond ETF, financial institutions are the main holders and foreign investors engages as well. This slide shows the usage of TSE-listed ETFs by foreign investors. As the graph on the left shows, holding of TSE-listed ETFs by foreign investors have been expanding year by year. Foreign investor holds 10 to 20% of the AUM of TSE-listed ETF, excluding the BOJ holdings. It appears that Japanese equity ETF are often used as a tool for foreign investors to gain exposure to the Japanese market. This slide shows the trading value of our ETF market. The graph on the left shows the total trading value of all categories. The largest percent of daily traded ETF is leveraged inverse type ETF. It is represented in light blue. It's quite popular because these ETFs are mainly used by retail investors seeking relatively short-term profit. However, we have seen changes in trading values as well. On the right side, it shows the average daily trading values of ETFs linked to foreign equity and bonds. As you see, until 2018, we saw almost no trades on these asset classes, but the situation has dramatically changed since then. This slide shows the total number of ETPs listed each year. 90 ETP providers list about 20 to 30 new products each year, and the number of ETP is steadily increasing. Recent trends in new listing have been in ETF related to foreign stocks and bonds, as well as thematic ETFs. With the growing presence of the ETF market in Japan, ETF providers are becoming more and more eager to launch new products, and it is likely that around 50 new products will be listed this year. This is an overview of TSE ETF market. In order to further develop the market, we are focusing on expanding our product lineup and creating an environment in which investors can easily trade. In particular, I would like to discuss the introduction of active ETFs and the efforts to supply liquidity in the later QA session. Thank you.
Thank you, Maekawa-san. Okay. So the next one, I would like to invite Mr. Jean-François Menacin, Senior Vice President, Head of Exchange Traded Product, Hong Kong Exchanges and Clearing Limited.
Hi, good morning, everyone, and thank you so much to the Taiwan Stock Exchange for having us today. I'm going to give a brief overview of the Hong Kong ETP market, and then we'll touch on quickly some of the elements that contributed to growth recently. So the Hong Kong ETP market in numbers, we have 174 products, which we classify in two categories. So we have ETFs and leverage and inverse products. These make up about 25% of the overall number. In terms of trading volumes, about 10% of the average daily turnover. Our average daily turnover on exchange is now close to $2 billion USD a day. It has grown significantly over the past 3 years. And we have a number of issuers, including BlackRock, China AMC, CSUP, eFund, and a few others, having chosen Hong Kong as one of the places to list ETFs. And we also have a very diversified networks of ETF market maker with some of the names on this slide. If I try to look back at, let's say, the past 5 years in Hong Kong, you can see on the right-hand side that ADT, so the average daily turnover, has significantly increased. In 2018, we were trading about 600 million USD a day. And year to date, in 2023, that number has tripled to be close to 1.8 billion. And that increase came through with a number of innovations. And you can see on the right-hand side, a number of innovations from a product perspective with the introduction of active ETFs in 2019, a few other ESG exposures becoming available, and more recently, we had the first carbon future ETFs introduced in Hong Kong, as well as virtual assets, so tracking the prices of Bitcoin futures and Ether futures. In terms of the overall breakdown of the market, you can see that a bit less than half provides exposures to either mainland or Hong Kong equities, but that pie chart has become increasingly diversified in recent years, where now we have exposures to overseas equities, Asia-Pacific equities, and increasingly fixed income, virtual assets still being small as they were introduced only at the end of last year. Just want to give a brief update on ETF Connect. It's a question that I get quite frequently. So after 1 year having established that connectivity with Shenzhen and Shanghai, trading volumes have increased. You can see on the right-hand side, these are the trading volumes that Hong Kong ETFs, the eligible ones, received through the schemes. And in June, it contributed to 80% of the Hong Kong ETF market. And final one, cryptocurrency ETFs. It's the latest innovation that has been brought to the Hong Kong ETF market. You can see that there are a few hubs already existing across the world, and Hong Kong was very pleased to welcome the Bitcoin futures-based ETF as well as Ether-based ETF. Thank you so much.
Thank you. And our next guest is from Korea. Let's welcome Dr. Song Chun Kim, Head of ETF Market, Korea Exchange.
Good morning. My name is Song Chun Kim, Head of ETF Market of Korea Exchange. I'm very pleased and honored to participate in the 20th anniversary of Taiwan ETF markets. First of all, I would like to touch on some important milestones of Korea Exchange market and key performance of 2023. This is market overview of our markets. Our market start with just 4 ETF with 0.3 trillion Korean won AUM, and it almost took 10 years to reach 10 trillion AUM in 2011. This growth is mostly attributed to the legislation of Capital Market Act in 2009, which allowed leverage and inverse ETF. And after that, thanks to individual pension account and then fixed income ETF growth, finally we surpassed 100 trillion AUM at the end of June of 2023. And we are right now targeting 200 trillion AUM in 5 years because our ETF market is small compared to our capitalization of equity markets. It's just 5% of that. And our market has grown annually 30%. Is key performance, what happens in during the first half of 2023, about 70 ETF listed in the first half, and new listing is focused on like semiconductor sectors and foreign representative ETF and bond ETF. And active ETF are very early stage right now, but the landscape, our ETF market is changing into more actively managed ETF preference. So I'm going to talk about that activity later on. And total active ETF market share represents 12% in terms of trading value and 22% in terms of AUM. Fund inflows. Domestic fixed income ETF became very popular because Korean investors become more and more conservative. They want principal protections and steady cash flow. So right now, money market ETF became very popular thanks to a recent interest hike. And the foreign market represents ETF of strong inflow also following the year of 2002, such as like S&P 500 and Nasdaq 100. And lastly, foreign and domestic tech and semiconductor and especially battery-related ETF received huge attention from investors in 2023. This is the last slide. It's the Korea Exchange Initiative for 2023 and 2004. We are in talks with our authority to eliminate the 0.7 correlation constraint between the return of tracking index and active ETF. And secondly, we are also planning to changing our current tick size from 5 to 1 and to improve our market depth. And lastly, financial investment income scheme will be effective in 2025. So new tax rate will be applied to both CADX ETF and global ETF. In result, we are expecting that more and more investments will come to foreign ETF listed in Korea markets. And wrapping up my presentation, I want to stress some points, input points, because Korea market is very dynamic and individual investors is very important for our markets. They're providing huge liquidity to our market. And secondly, timely and innovative products is a kind of key success point of our market. And lastly, the regulators is very important. They're willing to change the rules. Thank you for my presentation. Yeah, thank you.
Thank you very much. And the next one, I would like to invite Ms. Joyce Yip, Head of APAC Index Licensing, NASDAQ.
Thank you, everyone. 谢谢大家，thank you for the invitation from the Taiwan Stock Exchange. I'm very honored to speak at this conference today. Today I'm going to talk about the trends in the global ETF market. So on the left-hand side, global ETF market, the total AUM has reached 10.3 trillion US dollar with more than 10,300 products. On the right-hand side, US market, we have a total of 7.3 trillion AUM and with more than 3,300 products. So almost 70% of the global ETP markets are coming from the US market. The recent ETP trends we see, we will go through this one by one. So the first of all is the Nasdaq 100 performance. Nasdaq 100 jumped more than 41% this year, making the very best performance since year 2000, while companies add up with a market cap of almost 5 trillion US dollar. Leading jump was with the stocks like Nvidia lead the rally with more than 190% growth. And also the rally was so strong that even trumped the concerns like the inflation, rate hikes, geopolitical risks, and bank collapse. So this slide actually shows that after a slow start of the year, cash flow actually has picked up over the last couple of months. Although the flows happened the first half of this year is not as good as 2021 and 22, but actually the market performance contributed to the AUM change significantly. We can see that the AUM change for global ETFs was only better in 2021, when a record of 1 trillion US dollar was gathered at that time. We look at global ETF flows by asset class. Investors rotating out of bond into the equity ETFs only in June. A pause on the rate hikes and equity market is approaching its all-time high, have pushed equity ETFs flows higher, restoring the lead over fixed income peers. Equity funds picked up 70% of the flow in the month of June after the lagging behind about the fixed income funds, but only in 1 month. This is the equity versus income AUM growth. Equity and fixed income asset growth has been the tale of two different stories over the past years. Equity funds growth have primarily been driven by the market performance, while fixed income funds have continued to grow despite the poor performance as central banks globally have been raising interest rates. The biggest highlights of the year actually is of the ETF landscape is the ability of the actively managed funds to gather inflows. So that group continued to punch over the market with a net inflow of nearly 65 billion US dollar. The figure translated to 20% of all ETP flows in the first half of the year, while only being just 7% of total AUM. So this slide, we want to talk about the biggest highlights of the ETF market by active ETF. So since the first active ETF launch in year 2008, adoption of these products mainly is very limited, and only after the passage of the SEC's rule, the ETF rule in late 2019, when streamlined process and also added flexibility to issuers to launch active ETF, we see the growth has been significant this year, with 146 new active ETFs launched in the US market. So we'll talk about this outlook later in the session. Thank you, thank you, everyone.
Thank you, Joyce. And then we will have a group discussion, and I would like to invite all our panelists to come to the stage, but later on they are going to sit in the sofa. And as I said before, our topic today is unveiling the next generation of global ETF. And later, our host is Albert, and and he will organize the later discussions on. Okay, so now let me welcome our moderator and host and our panelists again. The first one is Dr. Albert Chiu, Vice President, Corporate Planning and Strategy Department, Taiwan Stock Exchange. And then our panelists, Mr. Sean François, Medicine's Senior Vice President, Head of Exchange Traded Product, Hong Kong Exchange and Clear Limited. And then we have Dr. Song Chun Kim, Head of ETF Market, Korea Exchange, Ms. Joyce Ip, Head of APEC Index Licensing NASDAQ, and Mr. Keiji Maegawa, Senior President of New Listing / ETF Market Development Department, Tokyo Stock Exchange Incorporated. So please come to the stage.
Ladies and gentlemen, on behalf of Taiwan Stock Exchange, I apologize from the background noise, and I try to solve the noise, already. I hope that they can stop violin. Oh, the violin stopped, so hopefully that's good. Okay. But anyway, the presentation, we have 4 major exchange in Asia, and NASDAQ is a global exchange, and they just share their view about their market. And now we like to discuss the most important issue is they all have a plan in the coming year about their product innovation, about their company strategy, and how to help the market grow and to have a further upstairs. So let's first welcome from the Hong Kong Exchange, and please, present your view, please.
Hi, good morning, everyone. So from a Hong Kong Exchange perspective, as you could see in the presentation, we have a number of products related to mainland and Hong Kong equities, and I think looking forward, there will be increasingly innovation. So fixed income, ESG, active and thematic ETFs, I think, will be on the radar. Fixed income, I think you have seen in Taiwan the success story of this segment. With rates perhaps peaking, it could be that the next fixed income rally is around the corner. So we see a lot of potential demand from ETF issuers and investors to access fixed income through ETFs. ESG, it's something that has been growing over the past few years globally, but also in Hong Kong. In Hong Kong, if I look back 3 years ago, the AUM, the number of assets invested into ESG ETFs, represented about 20% of what they are today. So we have seen significant growth in that space. Active ETFs, again, in some of the presentations from NASDAQ, we could see it's one of the segments that is increasingly growing and being looked at. A number of active managers look at ETFs as a new way to distribute their active strategies. So I think that combined with thematic ETFs, which has been a really growing segment in Hong Kong, a number of investors looking to access disruptive technologies that could be the sectors of tomorrow, ranging from blockchain, electric vehicles, semiconductor, and so on. So I think these segments will probably contribute to the futures of ETF.
Yeah, thank you. Mr. Kim, please. share your view, please. Thank you.
Thank you, Dr. Chu. As I mentioned in my presentations, Korea market is aging so fast, and so conservative investors they are looking for some investments with so principal protections and steady cash flows, if possible, like excess return of alpha. But the other hand, the Korea ETF market is very dynamic. In terms of trading value, it's third in the world. And definitely investors who want to take some speculative stance where the market move, they popularity of the leverage and inverse ETF will continue for a while. But as for conservative investors, as Fed rates raise interest rate and BOK Korea Bank raise interest also. So money market ETF and then overnight repo ETF has received positive attention for cash saving purpose. And lastly, for modest risk takers, I think the target risk ETF, which is a mixture of foreign equity such as Tesla and Nvidia and Korean bonds, will be a potential candidate for a popular ETF because it provides stability of bond and relatively good profits with a low country risk of stocks. At the same time, I think listening the needs of the market is very important for the fast introduction of flagship ETF. Thank you.
Yeah, thank you. Joyce, would you like to share the NASDAQ, the view on the product innovation, or you have a further project strategy,
Sure.
please?
Thank you, Albert. NASDAQ is like one of the exchanges in the U.S. And on behalf of the NASDAQ exchange, we are very happy to be here today. What we see from the ETF development is that U.S. is a very competitive market with a lot of innovations. So what we see is recently we see a lot of innovative products. For example, the options overlay strategies is on the steepest growth. These kind of strategies are providing opportunities to generate income, to enhance return, and also manage risk in various scenarios. So active ETF is also very popular, getting more and more popular in the U.S. market, and we see that it could drop the market share to 20% within the next 5 years. And lastly, direct indexing and customized investing getting more popular in the U.S. market, and we see that they will continue to grow in the near future. Thank you.
Okay, thank you. Kenji-san from Tokyo Stock Exchange, would you like to share your view, please?
In order to look into promising areas, we conduct an institutional investor survey every year. When conducting this survey, we send our questionnaire to various investors to find out what ETFs they are currently holding and what they would like to invest in the future. From the survey result, we found that Japanese institutional investors currently invest mainly in ETF links to topics Nikkei 225 and Japanese REIT market. But moving forward, there will be a strong demand for foreign equity and foreign bond ETF in the future, and multi-asset ETFs. As I mentioned earlier, the market for the foreign stocks and foreign bond ETF is expanding rapidly, and the result of this survey are consistent of these trends. And there are several reasons for this increased demand. The low interest rate persisted in Japan for very long, and this had made it difficult for institutional investors to manage their funds just through the ETF. And I believe that the lack of sufficient resources to manage funds especially among smaller institutional investors, due to a lack of manpower, has increased interest in multi-asset. And for the retail segment, since the new Nippon individual saving account, a system that provides tax-free account for investors, will be launched in next year. ETF providers are working to develop a new products to attract retail investment. It seems that multi-asset ETFs are in demand among retail investors too. Thank you.
Okay, thank you. I think we have just heard that KRX, they have a multi-asset, which is a bond and plus the equity is innovation, and they are doing quite well. And we see the NASDAQ, Hong Kong, and Japan, they have an active ETF, which is, I think, the future trend. And now, the second round question is, because in their presentation, I heard that Korea and Japan, especially Japan, they launched the NISA program and can help the retail investor have a tax saving on their investment. And also the Korea, and they mentioned they have a deregulation. And we all know that the rules and regulation is very important to our ETF market growth. So I would like to have first Mr. Dr. Kim and to comment on your future initiative and what's your regulation and so forth, please.
Thank you, Dr. Chu. At this moment, I think the regulation of our ETF, our active ETF markets, and then the new tax scheme is very important for the growth of our ETF markets. As I said in my presentations, Korea is aging so fast, and then conservative investors are increasing. They want principal protection and steady cash flow. So we expect that active ETF can meet these kind of needs. So we are in the discussion with our authority. The rule about the correlation with the benchmark index, which is supposed to be more than 0.7. But we're going to, after elimination of this constraint, active ETF issuers, they can manage their asset more actively and possibly get an excess return in the future. Lastly, the new tax scheme, same tax rate will be applied to both domestic ETF and direct investment of overseas ETF, which will be dividend payment is 15.4%, and the capital gain is 20%. But it's not finalized yet. We will see the draft maybe end of this year. And one more thing about our new tax scheme, that all the gain and loss of financial product possesses will be collectively net to calculate the net gain. And if there's a net loss, then the loss can be carried forward up to 5 years.
Yeah, thank you. And Kichi-san, you have anything to share?
We have been working to develop a listing system for actively managed ETFs in recent years in order to expand the product lineup of ETFs. Since active ETFs are already listed and utilized by investors in most overseas ETF markets, we wanted to catch up as soon as possible. So finally, in June of this year, a listing system for active ETF was put in place. Regarding the system, listing system, we designed the system so that easy to understand products can be listed by having ETFs disclose their portfolio holdings on a daily basis, and by setting certain restrictions on the use of derivatives under management. Several ETF providers have already applied to be listed, and Japan's first active ETF will be listed this autumn. As for the future, we would like to study and introduce a system for more challenging product groups, such as non-transparent active ETFs, which is not required to disclose their portfolio on a daily basis. In addition, I mentioned earlier, both institutional and retail investors in Japan are increasing investing in foreign assets through ETFs. We would like to see more foreign ETF providers with strengths in managing foreign assets to enter the TSE market. We hope that the introduction of active ETF will encourage foreign ETF providers to enter the TSE market.
Oh, okay, thank you. They show me just time's up. So one last question. For the new product we just mentioned, and we have a multi-asset, we have active ETF. However, we see in the US market recently there's a single stock ETF. So Joyce, quick, and you don't have much time, so please share your view.
Thank you, Albert. So this little breed of ETF on single stock and using derivatives to deliver leveraged or inverse target exposure. This ETF represents an exciting development and unique opportunities for investors to achieve their investment strategies. However, we also see a lot of challenges and risk from this ETF because you can imagine there's a lack of diversification. And also, it's getting more popular, and then the regulator actually are looking to this area as well, try to put on more kind of like regulatory measures on this kind of product. So thank you, Evan.
Oh, truly short and sweet. Okay, now let's conclude this panel, and thank you everybody for listening. Okay, now thank you.
Okay, thanks to our panelists, and the organizer has also prepared the gifts for all the panelists. I would like to invite Dr. Albert Chiu to present the gift. Okay, so let's take a group photo again. Okay, please give the warm applause for all the panelists on the stage. And then we're going to move to the second round. Our second panel discussion, the topic is the evolution of index investing, opportunities and challenges in a changing landscape. And while they are sitting on the stage, I'm going to introduce our moderator today. Our moderator today is Ms. Christine Chow, President of Taiwan Index Plus. Yeah. And then I would like to invite Mr. Chris Williamson, APAC Head of Index Investments Group, FTSE Russell. And the next one is Mr. Magnus Kedden, Vice President, Head of Fixed Income Data Service, APAC ICE. Mr. Douglas Walls, Managing Director, APAC Head of Index and Analysis, MSCI. Mr. Tim Brennan, Managing Director, Global Head of Capital Markets and Exchange Strategy, S&P Dow Jones Indices.
大家好，我是台湾指数公司总经理卓碧华。台湾指数公司是台湾证券交易所在2016年成立的全资子公司。我们台湾指数公司除了承接母公司的指数业务之外，我们在7年多以来也发布了近100档各类型的指数，提供给投资业者以及证券商发行 ETF 以及 ETN 商品，提供投资人多元的选择。此外，我们也提供给资产管理业者作为投资绩效指标。 应用十分多元。那我们指数公司期待在指数创新、价值创富的愿景之下，作为各位最佳的指数化投资的最佳伙伴。那今天非常高兴能邀请到国际的指数业者齐聚一堂，来为我们探讨指数化投资的未来的机会与挑战。那我们现在就开始。Let's get started right now. In recent years, market volatility has increased due to many significant events, including COVID-19 pandemic, the Russia-Ukraine war, increasing inflation, rising interest rate, and so on. Investors faced many uncertainties and rapid changes in the investment environment. Under these circumstances, they demand more efficient and innovative ways to use index strategies that could help them respond to these changes. Here, I would like to invite Douglas Walls from MSCI and Tim Brennan from S&P Dow Jones Indices, two of the most historic index companies that have accompanied investors through many economic cycles and crises in human history. Could you briefly share with us how investors could utilize index investing to improve diversification, enhance returns, or manage risk in the current market environment? Please.
Well, yes, and thank you so much, Christine, for having us here. We're absolutely delighted to be here, to be part of the celebrations for the 20th anniversary. And I agree. I think any discussion on index trends really needs to start with the extraordinary circumstances investors are facing. You mentioned conflict, geopolitical tensions, rising interest rates, inflation, even food and energy shortages, and that's before we get to the single biggest challenge we're facing, which is, of course, climate and the impact that that has on portfolios. As we zoom out a little further and think about the longer-term trends, there has, of course, been across the globe an extraordinary rise in indexing, a transition to outcome-oriented portfolios, and this opportunity for our industry to play a really key role in addressing climate challenges through innovative thinking. Going back to the long-term growth of indexing, MSCI, if we look at our indexes, we currently have something of the order of $14 trillion against these indexes, roughly 1/3 of which is managed passively. For the longest time, equity market cap methodologies have accounted for the majority of assets, but we see big changes and acceleration in non-market cap methodologies, and those include factor strategies, thematic strategies, ESG and climate strategies, a move into indexing and fixed interest, and even the rise of mass personalization through direct indexing. MSCI works across all of these categories, and it's because our clients and investors are demanding increasingly sophisticated tools as they grapple with the challenges ahead of them. We're working on, if I think about some of our recent developments, we are releasing our institutional client-designed indexes, and these are really aimed to allow institutional investors tremendous flexibility as their own investment needs evolve, and that comes with greater resources. We're partnering much more with other entities. A great example is bringing in the sophisticated pricing models from market access and incorporating those into our fixed interest index and analytics capabilities, in particular around trading and liquidity metrics. So if we come to Taiwan, we see the extraordinary growth
in your ETF market. Particular focus on outcomes-oriented investing and increasingly ESG and climate. We see the rise of indexing generally, and we see institutional investors picking up ESG and climate methodologies. Thank you. Thank you very much.
Thank you, Christine, for the invitation. It's a privilege and an honor to be here and join in your celebration in this weekend's event. S&P DJI builds benchmarks, trusted benchmarks, that are used by investors around the world. We're seeing the same shifts as other index providers of an active to passive world. This game is barely at halftime. There's quite a bit of the match left to go here, and we anticipate further moves into passive investing with multiple tools and in multiple asset classes. The first ETF that tracked the S&P 500 was introduced in 1993. Today, the S&P 500 ecosystem is among the largest, or is the largest, equity ecosystem in the world. Our exchange-traded derivative ecosystem benefits from a modular and highly correlated environment of instruments from which investors can have risk transference and an opportunity for return. We listen to our clients. We like to take an approach in which, by listening to the client, we hear the problems presented, and then we come up with a solution. We don't build solutions in search of problems. We are actively trying to solve problems in the market. Some of the most interesting problems that have happened in the past couple years. COVID, geopolitical risk, economic changes, volatility, and climate. With this, we take a multi-pronged approach. The introduction of factors, thematics, multi-asset instruments to control and factor for risk in these instruments. About a year and a half ago, we closed a merger with IHS Markit. This merger allowed us to have a much larger presence in fixed income space, and integrating that type of knowledge and skill set into our index offerings has really allowed us to be a much more rounded and 360-degree solution for our institutional clients. Investors are discovering new ways to use indices every day. This is an integral part of their toolkit, and we understand the obligation and the responsibility that comes with being an index provider and providing these tools for the toolkit. We are fully transparent, and we believe strongly in never compromising this trust that our clients have in us. Indices that we publish should add information for investors, and they should enable them to make good decisions on what's going on in the marketplace. To that end, we offer a wide array of unbiased information and education programs, articles, and data. Education is key for the institutional space, and then that will leak on to the retail space. We're dedicated to work closely with our ETF issuers, our partners here in Taiwan and around the world, and to continue to help fuel the growth in active to passive investing.
Thank you. The assets under management, AUM, of global ETFs has now grown to 9 to 10 trillion US dollars. And according to a survey of 549 professional investors worldwide by an international research firm, nearly 90% of the respondents invest in equity ETF as the most popular investment. 56 of them expect to continue to increase their equity ETF in the next 2 to 3 years. Moreover, 92% of respondents have invested in or are interested in themes related to innovation technology. Today, we also have Magnus from ICE, a leading provider of index across major asset class. Could you please share with us what mega trend of themes investors need to focus on when investing in ETF in the second half of the 2023 and beyond? Please.
Thank you, Christine, and also congratulations on 20-year anniversary of ETFs here in Hong Kong, in Taiwan. I think if we look at the second half of 2023 and the mega trends, we can think of it in three ways. The first one is at a macro level. So at a macro level, interest rates have been rising, inflation is rising, but we're potentially at an inflection point for rates. Are they going to come down in the second half of 2023 or in 2024? So clearly fixed income ETFs are of great interest to a lot of investors. I think that if you look at fixed income and short-term money market funds, we've seen that grow to $5 trillion in AUM globally, more than that actually. For Taiwan, it's an amazing marketplace for retail investors for fixed income. It is the most diverse fixed income ETF ecosystem in Asia. You have the most choice in terms of treasury through to corporate bond ETFs. So I think this is certainly going to be an area that is of a lot of focus for retail investors in 2023 and into 2024. The second area is really if we look at it at a regional level, or market level. For markets, one of the continuing drivers is the US equity market. It's still of a lot of interest for retail investors and institutional investors alike. You've got, recovery after COVID. We see strong performance year to date. And the importance of investment in this market in 2023 and beyond continues to be strong. The other market really that is of growing interest to a lot of investors, particularly in Asia and outside of Asia, is Japan. We've seen a mutual fund here in Taiwan launch based on Japan equity that has attracted a huge amount of AUM. But we're also seeing investors from outside of Asia, namely the US, investing into Japanese equities. So Japan, the economic performance has been very strong, and we think that that is going to be a market of a lot of interest to investors in 2023 and beyond. The third market is really, if we look at India. So India, I think I saw earlier on the Korea slide that the Nifty products had attracted a lot of AUM. Institutional investors are really getting interested in India as a marketplace. India has historically been quite a complex market to get into. The growth opportunities there have been high, but the complexity has been higher. I think now a lot of institutional investors are looking at the growth as being a bigger opportunity than the complexity it actually presents. In addition to that, you've potentially got a China plus one growth strategy going on with a lot of investors. They're looking at, historically, China has been one of the main markets for growth, but actually now looking to diversify that risk primarily due to geopolitical reasons. Taiwan is a great market as well. You've got well-advanced technology. You've got a great ecosystem for ETFs as well. So I see that for retail investors, the Taiwanese equity market is going to continue to be of a lot of interest. The third area is really if we look at thematic. So what themes are of interest? So at a macro level, obviously, interest rates are proving, fixed income is of interest, and then you've got various countries that are of interest. But thematically, electric vehicles continue to be in a lot of demand. I mean, if you all look at yourself, look at your colleagues, look at your friends, your family, how many people are buying electric vehicles now or thinking about buying electric vehicles in the future? This is going to be a trend that's going to continue on for some time. and all of the supply chain that goes into those electric vehicles as well. From a Taiwan point of view, you can't ignore high dividend or high income type products. Taiwanese equities and high dividend ETF products are of huge demand. So fixed income, high dividend products here in the Taiwanese market have been of a lot of interest, and I think will continue to be so. The final area from a thematic point of view is AI. I think AI is, you can't pick up a newspaper, you can't hear the news, you can't talk to someone without AI coming into the conversation. I think there might be some AI products coming to the Taiwanese market from an ETF point of view, and that's definitely a trend that I see that will be of a lot of interest in 2023 and beyond.
FTSE Russell of LSE has a long-term partnership with TWSE and us, Taiwan Index Plus, in developing joint indices in Taiwan. FTSE Russell has participated in Taiwan index market for a long time. Chris, could you please share with us what themes or trends are likely to be the focus of attention for ETF products in the Taiwan market?
Yes, thank you, Christine. And just like to echo, I think some of the comments from the panelists, I think they may have been looking at my notes. But pleasure to be here for the 20th anniversary. I think, as you said, FTSE Russell's been here for a long time, collaboration on indices and with ETF issuers. I think there's probably three things that I would touch on in terms of Taiwan ETF market and the trends and the themes. Maybe four if we have time. I think the first one is all of you. You know, the retail participation in ETFs, the mass market, this event has really been driving the AUM, and I think many other Asian markets are looking at Taiwan and looking how do we replicate that level of interest, that level of accessibility, understanding, knowledge trading. So I think that's been a tremendous thing and has driven, you know, the AUM to incredible highs. I mean, I think in the 2 years prior to this one, the AUM had gone from about 54 to about 77 billion, and as was mentioned earlier, already at 100 billion this year. It's really incredible. So the mass retail participation, I think, has been phenomenal. The second thing I'd say, and Magnus was touching on this, is, you know, the diversification away from the China market. You know, A-shares with market volatility has been some underperformance for a while, and we've seen other regional markets become of real interest to investors. Japan, as mentioned, Vietnam's another one, where there's been a lot of commentary around manufacturing, around the growth of that, and we've seen that domestically here. Singapore, Korea as well, and we see a lot of interest around ASEAN, around APAC market exposure. So I think diversification away from A-shares has been one. The second would be yield, multi-asset yield. So on the equity side, dividend strategies. You know, cross-index providers, there's been some very successful products here in dividend strategies, and that continues, particularly post-pandemic, or since the pandemic. And then also on the fixed income side, you know, the hunt for yield. US Treasury, short-term bonds have been, you know, plus 5% for the last few years, and I think you've seen that. And as Magnus said, you know, the range that's available here in fixed income, fixed interest products, I think is fantastic for the market. And then ESG. I don't think we can have a panel here, and Douglas and I are talking later more broadly about sustainable investment, but, you know, ESG, prominent theme, the interest levels, and a lot of that starts with the institutions. It starts with the big asset owners, what they want to express, and then I think you see that come down into ETFs in the market, and there have been some successful ones here, and I suspect that will continue. So yeah, I think everybody on this stage and the exchanges that were speaking earlier, and I think, you know, it's fantastic to see everybody here, and I think, you know, the markets continue to grow. So yeah, appreciate the invite. Thank you.
Let's move on to the topic 2. Due to the rising awareness of climate change, The major countries, one after another, are committing themselves to set a net zero goal in 2050. The trend of net zero impact global ESG investing themes, turning to focus on the environmental issues such as low carbon, climate change, net zero transformation, and so on. Next, I would like to invite Douglas and Chris to share with us the current development trend of environmental themes indices and a reference example of applying climate indices to ETF products in the Europe, America, and Asia market in order to help local investors understand the possible opportunities of practicing sustainable and responsible investing through these ETFs. Douglas.
Well, thank you again. So look, of all of the sustainability factors, it's certainly climate that's getting the most attention right now. And it's really not difficult to figure out why that is. I think over the last 12 months, we've seen record droughts, record heat waves, record floods right across the planet. And you know, what's true for sustainability factors in general is certainly true for climate factors. And what that means is those risks find their way into your portfolio. So what we've observed is, in general, around the world, asset owners tend to structure their climate objectives into three key categories. The first of those is managing the risk of the climate transition. The second is seeking to position their portfolio to profit from the opportunities that are coming by way of disruptive innovation as companies seek to position themselves to build more resilient, climate resilient portfolios. And the third key area is the promotion of stewardship. And through that, asset owners are seeking to leave a legacy of a better contribution from financial services to this great challenge. We've witnessed a massive increase in interest from asset owners around the world in relation to adopting climate indexes. And this really started around COP21, where CalPERS, EAPF, and AP4 adopted MSCI's low carbon target indices. Since that time, we've seen asset owners becoming increasingly focused on adding these other dimensions of opportunistically positioning their portfolios and engaging with companies to build better businesses. That's in addition to reducing their exposure to carbon stranded assets. Our approach at MSCI, I can tell you that climate is our #1 focus area. It's the #1 area that MSCI is investing in. And we're doing that across all 4 of our key product lines, which include indexes, of course, but also analytics, ESG and climate data, and also our real asset solutions. And we're seeking to engage holistically and really discuss a framework that's very comprehensive and allows asset owners to build climate into every part of their investment process. From an index perspective, we've structured our offerings around 3 key pillars. The first, I've already mentioned, is the low carbon target indices. You can think of those as approaches that maximize emission reduction per unit of tracking error. The second category we call climate action indexes. And these are really built actually with asset owners because it became very clear that asset owners don't just want to sell companies. They actually want to engage in those companies and in many instances retain funding in order that those companies can manage a transition. But that requires those companies to have very effective plans that are verified by third parties to reduce their carbon footprint and manage risks. And the last category, of course, is alignment. And these are regulatory required indexes that basically are rules-based and force decarbonization on an annual basis. Now, all of these categories have been very well adopted. We see our contribution as being more than creating the methodologies. And so we've worked very hard to create ecosystems around these methodologies. So you see that in the climate action indexes, where Ilmarinen in Europe very quickly seeded those methodologies with 17 billion euros. We have $6 billion worth of ETFs launched, the fastest and largest ETF raises in the history of the ETF segment. And we have SGX listing futures contracts. If we're looking in the Asia-Pacific region, NZ Super invested $25 billion, that's Kiwi dollars, but still 25 billion of them, in our Paris-aligned indexes. We have BLF here in Taiwan adopting Paris-aligned indexes. And we have Cathay with very sizable ESG and climate ETFs, providing outcome-oriented solutions to Taiwanese investors. Thank you.
Sure, thank you. Yes, I think the way we think about things is kind of starts with the big picture, and I would echo Doug's point really about the institutional and the asset owner engagement around climate and what we've seen in recent years. FTSE Russell conducts an annual survey of asset owners across a number of topics, and I think in the most recent one, under sustainable investment, climate was the number one topic, very, very heavily in Europe, North America a bit, and then Asia increasing. And we've seen that in the assets. You know, our climate AUM, or AUM in climate index strategies, has doubled in the last 2 years. So, you know, as Doug was saying, you know, we see those growth numbers across the industry. And so how does that then translate into indices? And I think one trend we've seen is you get a lot of companies who've been looking very, very deeply into climate. They can start with a couple of people, and then they grow into 20, 30, 40, 50 people sizes, and they're looking very specifically into climate data, climate modeling, starting with a kind of qualitative approach and framework, and then mapping that across to quantitative. And probably in the last 10 years, I think you've seen index providers, certainly FTSE Russell, and I think our competitors too, partnering up with some of these providers to create indices, to pull in very, very detailed climate data and metrics, and then think about how to apply that to index. And I think that's also where the institutional asset owner index conversation takes place, because they already have portfolios, equity, fixed income, sometimes with factor or smart beta exposure, and they're looking to apply or incorporate some of this climate data or considerations or their preferences. As Doug mentioned, some people don't want to divest from, for example, fossil fuel companies because they want to engage, but they do want to encourage improve policy and improve behavior around climate considerations. Some do want to exclude. Some have very, very clear ideas about sectors that they don't believe they want to invest in from a climate standpoint. So I think you take the climate data and start looking at how to apply it. And I think for us, one of our big partnerships has been with the Transition Pathways Initiative, which is a global asset owner and asset manager-led initiative with the London School of Economics, the Grantham Climate Research Institute. And the reason I mention it is because increasingly it's not just about looking backwards on climate, on emissions that have happened or revenues that have accrued from green products or services, but increasingly it's forward-looking. So what's a company's policy around climate change, around Paris-aligned temperature pathways? What's their policy? What's their management commitment or quality level to some of these things? How can we look forward rather than just looking back? And I think you're going to increasingly see that in climate index. And then related to that, you have a framework. Regulation continues to come in, particularly from the European Union, the SEC. There's pending regulation around climate disclosure. From an ESG standpoint, the Taiwan Stock Exchange are obviously looking at how to bring in disclosure for companies, and all of that, I think, then filters down into the data sets that apply to index. Ultimately, the question was about ETFs, so I think you'll see that to come down, and we've already started to see that in certain markets where climate ETFs have been coming in. So I think when they start to come in wholesale, I would encourage you to really look under the hood, because I think you'll see a lot of thinking, a lot of care and attention has got in by index providers, by third parties to have something that is truly representative of around climate strategy. And you'll see that come in ETFs, I think, in the years to come.
Thank you. The last question. According to ETF-GI, the number of ETF carrying an ESG label more than doubled in the past 2 years, reaching almost 1,300 at the end of 2022. At the same time, greenwashing has become a significant concern and challenge for investors as they select ESG products. Hence, I would like to invite Tim and Magnus to discuss how investors can identify and avoid greenwashing risks as they choose to invest in ESG ETFs. Could you share with us any suggestions?
Thanks, Christine, and really happy to get this question, singular. Chris, you touched on a key thing, is data sets. I'm going to come back to that in a minute. If you go back to the opening statement I made on question number 1, it was about trusted benchmarks. To avoid greenwashing, you have to look under the hood. And as a trusted benchmark provider, we welcome people to really take a look at our methodology. We are very transparent in the way our indices are constructed, and therefore, the issuers who partner with us to create ETPs and ETDs can have that confidence that we're doing the right thing underneath the hood. When it comes to, sustainability indices and the whole sustainability sphere, there's so many different aspects of this and so many different things that go on in this. It's imperative that investors and issuers really take a look at these indices and understand what is the type of index that they're subscribing to, that they're deciding to license IP for. The implications to the investment universe and the type of the portfolio that is being sought to be managed, it's really, really important to take a look at this. So we're proud of our transparency, and we really, trust is first and foremost for us. We offer a wider range of sustainability indices and index-based solutions, everything from climate, carbon efficiency. There's a whole multitude of indices out there that S&P DJI is proud to offer to our clients and to the community. I want to circle back to the core part of this of greenwashing. Climate, sustainability, governance is of the utmost importance to S&P Global. We have an entire division, Sustainable One, that S&P Global decided to invest in and spin up in recent years. This is a massive investment, a brand new division. Within this division, circling back to Chris's statement about data and data sets, we purchased TrueCost. We have scoring, data sets, and methodology for companies to subscribe to in order to get proper output and proper measurement for various offerings in sustainability. We're committed to this. It's a long game, and by compromising anything but the highest of standards, we will not be sustainable. And the S part is absolutely critical in this. So we're here for the long haul. We've invested in it. We have our reputation at stake. And we implore people to look under the hood, look across all index providers, be aware of what you're getting into, and insist that there's transparency in methodology.
So I can smell that I'm standing between all of you getting lunch, so I'll keep my answer brief. The message coming from regulators is that consumers must be confident when products claim to be sustainable, that indeed they are. Greenwashing misleads consumers and erodes trust in all ESG products. As a result, we've seen in Asia Pacific that regulators are identifying misleading conduct in relation to sustainable finance, including greenwashing, amongst their top enforcement priorities for 2023, and we can expect that continue on 2024 and beyond. And regulators in Asia Pacific have handed out infringement notices already. So there have been penalties to fund management firms for misleading investors. What we're seeing is many regulators are starting to build their own capabilities in being able to actually independently identify potential greenwashing by checking the fund holdings against fund stated ESG objectives. We saw this recently with ASIC in Australia, when they were able to identify multiple bond holdings in a fund that did not meet the ESG screening criteria. Getting ESG data is not straightforward. While you can have a company that reports ESG data in a comprehensive way, linking that through to all of the investment products that you could get access to in that company is challenging. So what we've seen is actually linking through ESG data through to bond holdings, for example, is a key criteria for a lot of investment managers today, and something that we've been able to help them out with as well. For investors in ETFs, I think there are two things that you should really look at to avoid greenwashing risks. The first, and probably most important, is choose products using indices that are IOSCO compliant. This will help ensure that the index has independent governance and follows strict compliance with a robust review process as well. The second is understand the index rules and data sources being used for ESG. A source that investors could use here in Taiwan, for example, to learn more about the ESG data that an index is using is the IR platform from TDCC. So I'll finish off by saying it's clear that ESG products are here for the future, but it's equally clear that regulators are going to make greenwashing a top priority for 2023 and beyond. Thank you.
I want to thank everyone for your time and sharing. Your comments have given us in-depth insight and inspiration to further understand the opportunity and challenge of index investing in the future. Thank you all very much. Thank you, everyone.
Okay, thanks for all the inspiring talk. And also the organizer has also prepared the gift for all the panelists. So I would like to invite Miss Christine Chow to present the gift. Okay, thanks everyone, and thanks for your joining today. And that's the conclusion for today.